this is Martin here from Secret, the channel for learning about trading and investing, and welcome to Markets Tomorrow, the daily market analysis show. We are looking at all the parameters in the charts, and then I'll try to analyze what happened today and how we can plan for a better trade tomorrow. So, what a day it was. Now, a big market correction happened, and now the question is how long would this correction happen or not, right? So we're looking for the analysis of tomorrow, September 21st, and it's Tuesday 2021. So without wasting time, let's get into the charts and see. Yes, let's clear all the supports, and here this is a chart of Nifty 50, and what you see here is an inverted hammer following a bull trap that is there previous to that. Inverted hammer is bearish. It shows the wick size, the length of the wick shows the bears up there, and the bull trap also shows that the presence of the bears. It's clear bearishness. And Bank Nifty, if you see, it's kind of a hammer, but not exactly a hammer because the size of the body is little extra, right? But it's the long wick again shows here clear bearishness, and previous to that you have a spinning top on the top. So this is clear bearishness, and it's pure bearishness actually. A spinning top itself is bearishness, and then inverted hammer, and that one both the indices clear bearishness. So what happened? What today? It was 188 points down Nifty. That's 1% corrected, and 1.7%. That's 666 points down on Bank Nifty. What a day! 1.76% down. So what happened in intraday? If you look at, let's go to 15 minutes on the Nifty, and we can see that it was a terrible day, right? Sellers, buyers, everyone. Look at what happened. Market gap down, went to 7420, so that's a V shape, and then recovered from there. V shape. Went up to 6. Recovered the entire. It's a full V that happened, and then it made an inverted V, and crashed, and then went even below the morning low, right? So that's a big tough day today, right? Same thing will happen. It's a gap down, V-shape recovery, and then inverted V-shape crash again, much further than the previous one. So that's the price action for the day. So let's now look at where are we on the charts on the support resistances. Look at that. We are at exactly the support zone of 17,400 and 17,350. Just taking a support there, and now if that support is it's a previous resistance zone that it has taken the support at, so it's a change in polarity. If it is bounced, there is a chance that it can bounce from here upwards, and if that support is broken, you have 17,300 and 250. That range you have another support, which is also a swing low previous. Then below that you have 17,150 and 17,050. Then Fibonacci retracement level of 16,900, right? So will it hold this Fibonacci 23 retracement level, or will it hold at 17,150, or will it hold? So you never know that, right? So how far this correction is. So, but there is a change in polarity, and it can bounce from here. And one more additional thing is that the momentum, which we'll see later. Bank Nifty is exactly a replica of Nifty. If you look at that, you can see that there is a spinning top instead of a, and then it's almost like a hammer, and there is a change in polarity here. That's because this is a support zone. This, right? This is actually a support zone because it had resisted here earlier, right? And there was resistance here at this zone, and then it broke out from there, and then it has come back at the previous resistance where it broke out from, and there is a change in polarity. Now if there is a chance that it can bounce and go up, right? And if that does not hold well, you will crack to 36,500 and 36,200 kind of levels. And then if that does not hold, it can crack to 35,900 and Fibonacci retracement 38 levels, which is 35 500 levels, right? So this 36 400 500 and 3 and 36 300, that also happens to be the Fibonacci 23 retracement. So there is a chance that it can take support here also. But the question first is whether this support is going to be taken and then can bounce from here or not. We don't know that, right? Now the interesting part is that you have the momentum indicators, which is showing that there is a reverse divergence here on the Nifty, right, where the price is moving up and the momentum is coming down. So this is bullish and it can bounce from here if it works out, but it's only on confirmation of a price move above the previous day's low tomorrow, right? So exactly same thing can be seen on the charts of this is a 6 bar, where the price is moving up and so you can, the price is moving and momentum is moving down. So this is bullish and you can bounce from here. So the change in polarity and the bullish divergence implies that there is a possibility that it can bounce from here, and that gets negated the moment it cracks below the low, and then all the supports and resistance that we discussed will come into play, right? So that we discussed the momentum indicators. Now let us, so momentum is bullish still on Bank Nifty all time frames and Nifty all time frames, but it has dipped, right, and formed a divergence for further up move on if it works out. But let's look at trend. The trend, you can see that Nifty trend is interesting because there is a bend. This bend is dangerous. This could be a signal that the strength is finished. 56 is the peak. Sometimes the bend can again turn upwards after dipping a little bit, but this trend after a big up move of the ADX, this is the ADX strength indicator. Strength of the trend has reduced and taken a sharp bend after a big rise. It's probably an indicator of a reversal of the trend, but trend is still in the bullish zones all the time frames. Look at Bank Nifty, it's a little different. You can see that the strength is still rising up in the bullish zones itself, right? So it's not showing a bend, but otherwise trend and momentum is intact with the divergence and change in polarity is what you can see. Now let's get into the open interest data and see what happens. And what does it show for the 23rd September? It's a bearish. 0.63 is not bullish at all for the put call ratio, and the highest resistance seen is 18,000. After that you have 17,800, and after that you have 17,700, and then 17,600, and we are at 17,500. So a lot of resistance support there. So there is a bigger support rating, it's 17,000. Look at that. So there's a chance that it can take support here even if it crashes tomorrow. Now Nifty 0.5, it is kind of bearish to getting into the bearish zones, but overall chart is bearish. The highest call rating is what is projecting at 38,000, and then we have 37,500, and the put rating is seen as 37,000, and then far away 35,000, too far, right? So if 37,000 cannot be held as today, it cannot be held tomorrow, right? Then we have hardly any put ratings down here for the next expiry, right? So the fight would be for the 37, right? And if it is moving up, the fight would be for the 37,500 and 38,000 eventually, which was touched upon earlier, right? If there is a bounce happens, right? So put call ratio is bearish, everything is bearish, and we can also see if the data is coming for the open interest for the. I'm not sure. No, the data is not coming for the futures, and so open interest showing bearishness and support resistance are clear. And Nifty put was kind of bearish, and there is the support that's at 17,000 and 37,000 is there for Bank Nifty. That's what put was saying. Now FII data has not come in. Last time I saw it, still now it has not come. Here on money control also it does not. Yes, it has come in. So what happened today is that there is an FII net. No, so there's no big selling that has happened. The big selling happened from the domestic institutions today. 1,600 crores of selling has happened from the domestic institutions, right? Not from the FIs. FIs in fact bought 22 crores, right? So that is something that is interesting. That gives hope that FIs are not selling. So that gives hope, right? It's only the domestic institutions that are selling today. So that's now the big thing for today is that the India VIX, the greed and the fear index, India VIX has shot up and closed. It shot up 15% nearly, and then closed at 17.55, which is very high, and anything beyond 2025 is going to be very difficult to trade because the volatility and sharpness will be too much, right? So there is a lot of fear in the market, is what this indicates. And then, so gone are the days of the 11 volatility with no premium. So premium increase, option sellers will start making money if the strategy starts working out. The volatility will increase, and we have to watch out whether this will keep on rising or make a formation or a range in the coming days. We'll have to wait and watch for that. So the premiums are back, is what India is talking to us. Now look at the global markets. All the US markets are down, 500 points down, Dow Jones 250 points down, Nasdaq, and S&P 500 is another. All European markets are down. All the Chinese markets, Asian markets, all are down, right? So that was there yesterday also, and that's the reason why we have also followed the path, most likely, right? So uh, that is something that you have to keep in mind the next day, right? Let us check that before the pre-market and how it performed in the global markets. Tomorrow's pre-market, this would have to be checked once again to confirm that, right? In fact, the global markets, right? So look at what happened in bitcoins. Even the bitcoins have fallen down, right? Substantially, right? So if you global markets, all the markets. Now look at the dollar index. Let's see what the dollar index is saying. Right, it's shooting up. Right, the dollar index is shooting up, and stock markets in the US are crashing. So USD INR currency pair must be bouncing. Right? So today was kind of a bearish, gravestone kind of pattern where there is some kind of government intervention probably, but it has halted the up move, right? And there is some resistance that we see in the chart for the currency pair, but dollar is strengthening each day, right? It's probably may break out once again from this resistance zone, looks like, right? And oil has come down slightly, right? And oh no, it had gone to the all-time levels of 75, and then it's at the resistance zone. It is not breaking out into the last week. It's dipping, which is good for a Bitcoin. Right. Gold has shown some small green because dollar is now, yeah, some green is there back. So dollar was weakening earlier, and dollar was strengthening earlier, and then it had dipped, but it is not ready to let go of this major support zone, right? A very, very good support zone. So last time also you can see that this support zone was very critical when this hammer bounce happens. Most likely we may try to make another attempt to the channel top once more, right? For the gold, right? So that's the global markets, and that's what the markets are doing, right? So let's also see how the sectors perform today. And if you look at the market, you can see it's all well, except for it's all red out there that happened, right? So the more red can be seen in all this index. FC had big lands everyone, so almost everything. Let's actually see if there is any particular IT is showing some kind of There's some slowness, bear with me for that. So IT is showing that there is correction. It's a gravestone doji after two bearish candles. So, but the thing is, there is another reverse divergence which is bullish that can again pull it back if it works out. So if there is a move above this small body tomorrow, then probably maybe the bullish reverse divergence that's working out. But this based on doji candlestick is bearish, don't mind. So it was long pending. Probably it may take the support of the momentum 60 here and bounce back. But there's a very minor correction compared to the vertical rally that is happening. Now metal had done the big dip today, 374. Right. So slightly, yeah. So metal did the big, so the big down move happened on the metal. Look at that. Look at that. Hit the resistance and then fall down 10% in just 2 days. This is what brought the market down, right? So that's a big down move that happened. It's lost the momentum, everything. Even auto, which was bouncing and moving upwards, has taken a hit. The momentum is lost, right? It is only one momentum was there. Farm was already in the sideways, which I believe might have, turned, down in the sideways, taken the resistance, and that is also going back to this region. And FMCG was green, right? So that's the only sector that is showing green the entire day, right? So this is the ITC was performing today, right? So FMCG and IT, right? FMCG is a kind of in the market, it's defensive stock, right? IT is dollar based and then it's performing still bearish, but even reality has gone to sideways momentum after the cup and handle breakout. Handle is formed and the handle breakout has happened, so it could again go to the neckline and take a support here and then consolidate or move from there, right? But the momentum is lost. So right now IT and FMCG is only two sectors. All of a sudden there is a crossover happening in the reality also. So that's a that's what markets. So it's a global bearishness that is happening. So it could impact us also. Moreover, we are not corrected much. So the key question that you have to look at is the support and the resistance levels that you have marked on the charts. Keep that in mind. Whether we can expect a correction that can extend to 17,000 at least, and if there is a bounce happening, well and good. Everything is all right. But if it is correcting, we can expect it to hold at that levels. If that is gone, then we should know what are the below levels and then play around likewise. So positional players has to be knowing the support and resistance levels where they have to exit, right? And how they have to trade it if in case the bounce is happening from here. And intraday players has to be aware that the volatility has increased to 17. It has to cool off. Option sellers can make money by having intraday strategies on Wednesdays and Thursdays if they are selling based on head strategies, right? So the volatility regime has changed. That is something that option sellers has to take advantage and buyers has to be cautious about. Right, stop losses tight has to be put in, right, when you are going for a buying. So this is all that is there, a wrap up. And right now there's no stock ideas, but probably should uh, pick up some of the FMCG stocks which are performing, right, and see if IT is making a bounce from the momentum support regions, and that may be a time where stocks like Wipro and those which has moved less, right, or those who corrected themselves and those who had some momentum support can be picked up, right. So do your due diligence and then take the advice from your financial consultants and advisors before you take trades, and at your own discretion, right. And that's all the wrap up we have. Hope you get to learn something and it benefits in some way to plan your trade for tomorrow. Thanks for watching. Happy trading and happy learning.